Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Scott Brave, lead consumer spending economist at Morning Consult, to discuss consumer spend trends and if there will be relief in November core inflation. Scott, it's great to have you with us. Welcome to Trade Talks.
Thank you very much for having me. It's nice to be here.
All right, you got it. Let's talk about what you saw in October as it relates to the consumer, because it was kind of a mixed bag there.
That's correct. Yeah, I think a little bit of something for everyone in October, whether you're an optimist, a pessimist, or just kind of riding the fence. So we definitely saw some inflation relief in October, and that showed up in the spending data. We saw that in retail sales already last week. But there's still a lot of headwinds that the consumer is facing going into this holiday season. That inflation's still elevated. Incomes are still not keeping pace with inflation. Savings are dwindling. Credit use is rising. So there's some reasons to be a little bit cautious as well.
So as you look into November, do you think that we could see some relief in November core inflation? I mean, the data is just so lagging that we could even be experiencing it now. We just haven't seen it show up in the numbers yet.
That's correct. And actually, some of our high frequency data at Morning Consult suggests that at least some of that relief in core CPI that we saw in October will continue into November. We've seen this pattern a lot this year where we get these big drops in inflation and then they're followed by surges. We expect a little bit of that, a little bit of an increase again from the pace that we saw in October, but not nearly as much as we saw in the summer, for instance. So there are some good underlying trends this time, particularly on the supply side. We're seeing some continued improvements on the supply side of things that will help to put some downward pressure on inflation. But still, it's important to recognize that we're moving to sort of this 4 to 5% range for annual inflation, still well above the Fed's 2% target.
And Scott, let's talk about your thoughts into holiday 2022 and spend. I mean, anecdotally, I can tell you I was out shopping this weekend with my mom, taking advantage of those promotional early Black Friday deals, and certainly compared to what we saw last year, and of course, 2020, when we were sort of in the height of the pandemic, there is definitely foot traffic back in the stores.
Yeah, I think consumers have noticed these declines in prices, or at least the increase in discounting. I think retailers have been kind of saying this for a while. They've been pointing to the fact that they thought they would need to discount more this season because they were expecting less demand. I think we're starting to see that. So that is the part of what we've seen over the last 6 weeks or so that leads me to be a little bit more optimistic than I was, just about 2 months ago or so. Consumers are responding to the inflation relief. And so while we went into this holiday season thinking we're at a position, overall purchase intent in our data was much lower coming into this holiday season than it had been the last few years, I do suspect that some of this discounting, once consumers get wind of it, we'll see a little bit of a pickup there. But on the same token, it's not necessarily a good thing for retailers either. It's tighter margins than they've seen the last few years.
Right. Well, of course, we know the inventory challenges that they've had. It came out in Target's most recent report, and something that they've been talking about all year is they ramped up inventory in response to pandemic demand earlier in 2022, and that has certainly fizzled out. I mean, it's great for the discounters, right? Like Ross Stores and TJ Maxx. It's always been the story because they get that extra inventory over. But I really think that inventory control, even more so than consumer demand, really is the key for the retailers this year.
I agree. And I think that's why you're going to see some mixed results across the retailers and just how good they've been at inventory control. And you've seen that already a little bit in some of the earnings reports that we've seen come out over the last few weeks. This transition from goods back to services that everyone's been expecting, sort of undoing that pandemic result where we took a lot of services spending, shut it down, and consumers moved to buy goods instead. We've seen that unwind much more slowly than people expected. And I think some of that filtered over into inventory control, the expectation that we could hold higher levels of inventory of goods in particular because that demand was still going to be there. Some places got caught off guard because that's not been true in every product category for sure. Others have been fine. So that's part of this sort of mixed data that we're seeing right now. It's really a transitionary period back to a more return to normal type pre-pandemic world, if we ever get back fully to that kind of world again.
Yeah. Where are you seeing increases in services spend?
Services spend is one of the things that we're watching closely because, we saw some relief there in inflation in October, but a lot of that was concentrated in medical care services. And that's not going to be something we can expect to see, at least not at that rate on a regular basis. Housing services are still something that we're watching closely, but we've seen the housing market slow quite a bit, right? So we've seen prices level off, rents start to level off. It takes a while for that to be reflected in the official statistics, but it's there. It is a very interest rate sensitive sector, and it responded very quickly to what the Fed has been doing with interest rates. Broader services spending, though, we're getting down to a more normal level of inflation and demand there, but it's still not quite back. People really want to travel. We saw that over the summer. They've been less price sensitive in that area than in many others. But we were a little worried coming into the holiday shopping season that we were seeing services spending, people pulling back on that, more trading down, more putting it off. We saw some relief in that in October. I think that's good. We need to get back to this transition, this ebb and flow back from goods to services. But it seems like it's definitely going to take some time still.
All right. Appreciate the insight, Scott. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Yeah.